Communication barrier. These two words have caused humanity a ton of inconvenience. From the less serious miscommunication between peers to more fatal ones that lead to war, disease outbreaks, and countless more deaths from everyday problems caused by it. And none now is more affected by it than the digital world, where millions, if not billions, are lost just because of a few letters of words that people aren't familiar with. And, as with any other community, the world of cryptocurrencies has its own set of jargons that are being tossed around daily. Welcome to our channel where we show you all the latest, relevant, and any information that has to do or affects the world of cryptocurrencies, all in the comfort of your very own Crypto Attik. Today, we're showing you the different terms of the trade for crypto. And though you are not required to know these, it just brings so much more advantages for you. And all we want for your crypto venture is to make it as inclusive and smooth as it could be. Before anything else though, please remember that this video is not any form of financial advice, but solely our fact-based opinion that is meant to educate and inform you of the latest and most relevant information fresh from the world of cryptocurrencies. We strongly urge you to do your own research before dealing, trading, or buying any cryptocurrencies. Knowledge is your greatest asset. Invest in it first. Let's get to it. DYOR. Do your own research. For someone to even try and enter the world of cryptocurrencies, they must expose themselves into and consume a lot of material. And as cryptocurrencies are mainly based online, there will surely be droves of information available for any given topic one could think of. This is where DYOR, or do your own research, becomes one of the most important things to know and understand. As you go through tons of stuff about crypto, you'd start to notice DYOR more and more. Hey, it's even on our video's disclaimer. Learning proper research methods and techniques will surely help anyone, especially those who are looking to invest in crypto, to streamline information into actual data that could be used for their trade and transactions. Online content, for the most part, are personal opinions of authors and creators. A really great way to start doing your own research is by focusing on established entities that lay out fact-based information. These entities have a name to maintain, thus making them more accountable for things they publish online. ROI. Return on investment. Now, this term is one of the most tossed around terms even outside the cryptoverse. ROI, or return on investment, is a term that was developed way back in the start of the 19th century and was designed to give a clear outline for businesses and investors to see when their investments would evolve from being a liability to becoming actual assets. For a more precise explanation, it simply is a way that tells you the profit you'd make compared to your capital, or the investment you made to start the actual business or trade. This also gives you the opportunity to compare one investment to another so you can make the best data-driven decision you can make for your future. Here is the formula for ROI. Let's say you invest $1,000 on Bitcoin and it grew to $1,600 in a year. Using the ROI formula, you deduct the initial value, which is $1,000, from the ending value of $1,600. You then divide the answer by the initial value. You should come up with an ROI of 0.6, which multiplied by 100 will give you the growth of your investment in percentages. That's 60% growth. Risk-reward ratio. As with any form of investments, the cryptoverse is not all positive returns. That is why you should be able to discern the risk-reward ratio of each investment you're about to enter or engage. It is a term widely used in both financial and crypto communities. This ratio shows investors and traders the dangers of losing their investments relative to the likelihood of them making money from it. So if you see people or entities from the cryptoverse talking about a coin's risk-reward ratio to be 2/3, that means that you risk losing $2, but there's also a chance for you to gain 3. Of course, these aren't 100% accurate all the time, but it can somehow give you an insight into the coin's potential growth or decline. FUD. Fear, uncertainty, and doubt. The term FUD, or fear, uncertainty, and doubt, is mainly used online whenever someone or an entity spreads false or negative rumors about the cryptoverse. To make players and investors nervous, uneasy, and begin to question the coin, they spread this FUD. The coin's value will then decline due to their actions. These unsavory individuals and entities usually do this so they could gain on short-selling crypto, a trading practice that basically makes you money as the value of a coin you engaged in depreciates. That's for another video entirely, but the point is that when you see FUDs, you should utilize your researching skills to find out what really is going on a certain coin or topic, so you won't be misled into making bad decisions. FOMO, fear of missing out. This one is perhaps one of the more commonly used phrases in society, and it's not limited to the cryptoverse only. It's only normal for you as a person to strive to prevent feeling as though you've lost a great opportunity. No one enjoys having the impression that other people are having a fantastic time without them. And there is no greater place for this kind of emotion than in the world of cryptocurrencies, where FOMO is a pretty potent emotion. Imagine people sharing investing $1 into Bitcoin, which then rocketed to thousands of dollars. You'd naturally want to hop onto the craze, and the psychological tendencies of us humans may be part of the explosive growth the whole cryptoverse experienced. HODL, hold on for dear life. Basically, what HODL or hold on for dear life means is that after DYOR, you put so much trust into your coin of choice that you decide to go against any advice you might receive and just hold on to the coin in hopes of reaping massive returns in the future. This of course demands a lot of discipline, patience, and conviction from anyone that actually holds onto the coin. Crypto Fear and Greed Index. A term more exclusive to the world of cryptocurrencies is Crypto Fear and Greed Index. It is a measurement of 0 to 100 for people involved in crypto to use as a guide. Investors are more fearful when their score is lower and more greedy when their score is higher. This indicator is heavily utilized by cryptocurrency traders when determining when to buy or sell their coins. The result is decided by the Cryptocurrency Fear and Greed Index based on indications in the market and other platforms. KYC, Know Your Customer. Another term that is widely used in the world of crypto is KYC or Know Your Customer policy. This requires anyone who is going to engage or enter the crypto market to create an account with varying levels of information to ensure the credibility of a person or entity and lessen the chance of bots or criminals to exploit the crypto markets. DD, Due Diligence. The term due diligence means that anyone who buys or trades cryptocurrencies is expected to have already done their DYOR heavily, and they are completely responsible for whatever the future of a very volatile market may bring. Remembering this could save you from auto-buying coins when you're having a FOMO episode. AML, Anti-Money Laundering. This term arguably holds more weight than any others on this list. Anywhere in both the physical and digital world, money laundering is a major issue that needs addressing. It destroys a community's reputation and the trust it painstakingly builds, all because of greed. Anti-money laundering laws, regulations, and policies have already been put in place to prevent money laundering in the cryptocurrency industry. Less criminals are using cryptocurrencies to launder money, now that AML procedures are in place. That's all for today. Don't forget to like our videos and follow our channel Crypto Attik. If you don't want to miss any of our next videos, then hit on that notification button as well.